Do you know what the number one thing that can destroy your trading is? Stay tuned, we're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about getting your ego out of trading. The number one thing that can destroy your trading is your ego. Your ego is going to be the one thing that won't let you get out of a losing trade. Will talk you into getting into a trade too early. Will tell you to hold on to a loser or even add more contracts into a losing trade. Your ego will talk you into taking on a lot more leverage than you're capable of trading on the account size that you're trading with. Humility. That's what you need to focus on, humility. So humility is about getting the ego out of your trading and focusing on being humble. Ego is going to talk you into getting into a trade ahead of when your trading plan actually calls for that signal to be entered upon. You're going to be in a trade. It might not be going to plan. Your ego is going to tell you to hold on to that a little bit longer or move your stop, so just gives it a little bit of room to breathe so it doesn't stop you out, because maybe they're going to try and run stops. Your ego is going to tell you that you need to show your friends you know what you're doing, so you're going to take on a lot bigger positions so you can show them that you make some real money. Your ego is going to be what destroys you, helps you destroy your trading account. Now, if you're humble, you can recognize your own limitations and weaknesses without feeling bad about this. And you have a healthy respect for the markets. You know, I talk about this over and over again. One of the biggest impacts on my trading has been following and learning from Peter Brandt, 40-year trading veteran. He's a student of Richard Schaubacher's writings, technical analysis of stock markets. If you haven't gotten Peter Brandt's books or Schaubacher's, get those books. Those will be books that will impact your trading. They'll shift your thinking from being system-oriented in terms of entry and exit or trade selection-oriented and focused on risk-reward and asymmetrical opportunities. So when your ego is involved, you think that what you know about the markets and how much you know, if you're entering into trades that go against you, because it fights against what's naturally ingrained about being right, about winning, about making money, you will try and fight the market. You will hold on to losing positions. You'll take signals that aren't in your trading plan. You'll make emotional, irrational, and impulsive trading decisions. And these are the things that will keep you staying in a zone of no progress. And I talk about this all the time. If you read the tagline on the blog, helping traders to have discipline, confidence, and a winning mindset to master the markets. That is not just an affirmation. That is developed through the arduous process day in and day out of sharpening your trading skills, bulletproofing your mindset, not only with the technical aspects of trading, but understanding how to manage that trading process according to your rules and also to manage your capital. And the number one thing with capital management, you know, you read all these different approaches, the 1%, 2%, 0.5% Kelly model, doubling up, doubling down, all these things. But the real secret to capital management is identifying asymmetrical risk-reward opportunities, taking small losses and riding those winners till they fulfill those targets. That's a risk management model that enables you to take losses and ride winners so that you're getting 4 and 5 times to 1, but also your losses are small. They're a small portion of your account. But ego is the one thing that you need to learn to get off the table. So if you follow Peter or if you've listened to Peter talk, strong opinions weakly held. He is quite happy to put his factor trading plan out to the members, show them his trade models. He's a breakout trader. Every trade is just another trade. He could care less if he gets stopped out. He manages his capital, he's on to the next trade. So every trade is just another trade. It's just another datum point on a series of datum points in your trading account model, monitoring those metrics of your trading system. So if you have ego, you're going to be arguing about whether the market's going up or down. You're going to study a chart until you can manufacture a position, or if you're in a position, you're going to put all these indicators on a chart until it validates the direction that you're trading in. These are all the things that are unsustainable long term. They're not reproducible. You cannot duplicate those results. So have a think about that. Get your ego out of the game. Be humble. Focus on the process itself. So the 3 M's: money management, methodology, identifying your edge, keeping it as simple as possible, and then your mindset in terms of managing that whole process. So focus on flawless execution. Be humble. Stay disciplined. Stay focused. And may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.